On the markets, more or less every single asset class sold off, and gold wasn't spared. It was down $65, $70 from its high, I think it was, and it's currently below $1,300 an ounce. Let's find out why and what the future holds with Jacques Bourta, Chief Mining Economist at Pan-African Research. He's on the telephone. Jacques, that was sort of reminiscent of what happened a couple of months ago when the gold price fell 200. Not quite as bad, but quite disturbing at the same time.
Yes, very disturbing, Lindsay, very disturbing for employment in South Africa. We see some of the mines are actually running at a loss now. Some of our big mines are running at a loss, and we have, on average in the world, it seems that the bigger miners at this price could be very close to not making a profit. So we actually think the price won't go. This is really it could bounce up a bit. It's not really it's not viable to mine at this current price. Unfortunately, gold has experienced a perfect storm now, the gold price, where we would say the three major drivers why people will hold gold, especially the speculator and the investor that sort of can easily jump in and out, is the US dollar. There's now, because of the global story, the US dollar is seen as there's an uncertainty even about China now. There's a talking of even a banking crisis in China. So there's a bit of a fled to the US dollar as being the safe haven currency. So that's the one story. The other story is global inflation. Doesn't seem to be at all a problem. There even now talks of global deflation. The oil price has come down. That's of course another. The oil price is touching $100 now, and the big sort of uncertainty in the oil industry is also out of the way with the new, very dovish Iranian leader, where Iran seems to be now totally abandoning their nuclear program, and there seems to be much more relaxed easiness about the oil price around the Middle East. And then just generally, the whole gas story is putting pressure on oil. So inflation from oil seems to be away. The markets see that. They feel that energy inflation is gone. They also see, if you look at the latest, the food on the lands everywhere, the crops, Brazil, even America, the maize that was planted there. Food inflation is also going away. So, and then there's just the normal inflation that goes with economic growth, which is not, the world growth is not strong enough. There's high unemployment, so there's not wage pressure. There's also high capacity still, so there's also not capacity pressures on inflation. So inflation is not a problem.
You're depressing me, Jacques. Let me just interrupt you. You're depressing me with all those bearish factors. But what disturbs me the most, I think, is on that fateful 2-day period where the gold price fell $200. Okay, there was stability after that. We got close back to, I think, 1,600 at one point, or am I getting my $100 increments wrong? But anyway, there was a nice bounce back, and now it's come back again. And it seems to have set the tone. Yesterday we had $60 to $70 fall. It's a sell the rallies market. And the other thing that's disturbing is that one would have thought with stocks coming off and bonds coming off on the international markets, gold might be the recipient of some of the money flooding out of those asset classes, but not a bit of it. It's going in the same direction.
Yes, no, and as I said, the factors, the typical factors that makes gold attractive are totally gone. Even the safe haven story, where there were fears of a war in the Middle East, that seems to be the Israel problem is gone, and even China seems to be the string of pearls story around China and potential conflicts on the North China, South China Seas is also now the new Chinese leadership coming out very dovish. So there's nothing really in favor of gold. Now we will have to look at the reality of the supply. The demand story is the supply story is the demand story is very bad. But the supply story is now what's going to put a brake on the fall of the price, because at the current price, the supply will dry up, the miners will close. Some of our big miners in South Africa would close. So I agree with you. I think there should be a bounce back very soon now, to at least at a price of about 1.14 seems to be sort of a price between about 1.350 to 1.4 seems to be a price where most miners could still make a bit of profit. But under that, too many mines are going to have to close. So that's sort of my. I don't think one should panic now. It's actually, this is now time. I would actually buy gold now at this price. But it could go.
Let's leave it at that. Buy gold, and Buy gold and don't panic. That's your message, Jacques.